I just wanted us to restart with the asset, that equipment account again. Yeah? Let me redraw it for you. Because obviously, with the first video, it already went out with what we had written down on the whiteboard. So I wanted to restart. So look at this, buddy. That's the debit side, that's the credit side. So this one is simple to do, the equipment account. Why? Because we know that, okay, so at 2016, it's in Feb, ne? But obviously, it will not be Feb here. It will be 2016 on the 1st of March. So this will be on March. I just wanted to correct a few things, okay? This will be March because March is where the year started, okay? March of 20, but it will be of 2015. March of 2015. That's where the opening of that year would be. Then obviously you would have balance brought down on that value. How much is the value?
470,000.
Yeah, 470K. But if we wanted to just do it, yeah, so this is where the year started, okay, in 2015, 1st of March. Ne? And then obviously we bought another asset, but now this was in 2016 when we were not specifically told when, but I'm just going to use 28 Feb. We could also use 2016 Feb, the first day is too fine, okay? But I'm just trying to be practical. That's why I'm using the very beginning of the year of this particular organization. That's why I'm using 1st of March. Now, but the date is not the most important thing here. It's what you are putting in which matters. So bank, cash payment journal, and the value is 86K, right? And then on this side, 2016, can also put Feb at the end of the month, right? We know that there is an asset that was disposed. So I'm going to say the asset disposal, okay? And then we also know that we're supposed to have a closing balance here, buddy. Balance carried down, which was already given to us, which is that 516,000. Are we together?
Yes.
Let's go back to our info. How much is it? Here it is. This is the closing balance, 516,000 rands. The opening was 470,000. And something happened, we bought, but at the same time, also there was something that we sold. So if I compare the two sides, which side is bigger?
The credit side. No, wait. Sorry, the debit side.
The debit side, yeah, because there's 470. If you add 86 to it, how much do you get?
Pardon?
470,000 plus 86,000. How much does that give you?
556,000.
It gives you 556,000. Are we together?
Yes.
556,000. So the difference between these two, it should give you the asset disposal, which will be that 40K.
Yes.
Is it making sense?
Yes.
Right. I wanted to show you from a simplified way.
So it's also another way to
It's also another way. Yes, exactly. That's also another way. Besides that other longer route that I had shown you. This is also another shorter way. Okay. So obviously this becomes an opening balance of the following financial year. So it should be on the 1st of March, 2016. Are we together?
Yes.
So that's how your equipment account is supposed to look like. Let's do the asset disposal account. Is it fine?
Yes.
So with the asset disposal, this one I'm going to be asking you questions because I've already explained some things to you. Ne?
Yes.
Right. So young man, what are we going to put on the debit side first?
The cost price of equipment, which is the 470. Oh, no. The 516.
Are you sure? Which asset did we sell? What was the cost price of the asset that we sold, of the equipment that we sold? What was the cost price? You get it from here. Do you see it?
I'm confused.
You're confused.
Yes.
All right. Remember, equipment, all in all, we had at the very beginning, they were to the value of 470K, right?
Yes.
And we bought some new equipment to the value of 86,000, right?
Yes.
And then at the end of the year, we are told that the value of all the equipment now that is remaining, it's how much? 516,000, right?
Yes.
And then we know that this side, the debit side and the credit side should balance. And we compared the 516 against the total for the debit side, which is 556. And we observed that then there should be something else that happened concerning the equipment, which is what? Asset disposal. There's an equipment that we sold. So you see this value written asset disposal, 40,000. That's the cost price, yes, of equipment which was sold. The others, they are
Oh,
still
okay.
remaining. Does it make sense?
Yes. Yeah, I understand
So,
now.
so what you put in the asset disposal, it is the cost price of the asset that was sold, which is Rukai.
40,000.
That was that 40,000. Can you see it now?
Yes.
Right. And then let's go to the credit side now. We're going to start with accumulated.
Depreciation.
All right. And then, of course, you also have what else? Let me see.
The trade in, because it says equipment
Not
was
trading.
sold
Not
on
trading. We sold the thing on credit. Trade and other receivables, right? You can put it as trade and other receivables, or you can simply put it as debtors control. Are we together? I'm not sure which one you
Oh,
guys
yeah.
use. Yeah.
Yeah, well, I'm used to the debtors control.
Or you're used to the debtors control. Okay. Let me use what you guys use, okay? So that I don't confuse you. Right. So let me stick to what you guys use. So this would be debtors control, because we sold this thing on credit. So now let's go back and find out the information. How much was the value that we sold this equipment for? It's 25K. So you put it as it is there. Now, how do we know the total depreciation that was accumulated on this asset? That's where you now need to look at the cost price, which is that 40,000, and you compare that against this value.
Please repeat.
That's where you need to look at the cost price, and then you compare it against the carrying amount. So that difference between the two is what gives you it's what's gonna give you,
The
yeah,
accumulated.
the total accumulated depreciation.
Okay.
Did you get the logic?
Yes. If
So
we
it's
have
the
to
carrying
get
value. Actually, you know, in accounting, when you want to calculate the carrying amount,
current value,
yeah, I mean the carrying value, yeah. What do we do? Carrying value,
is cost minus accumulated depreciation.
cost price minus accumulated depreciation. So I carry very carrying amount. How much is it? 28.
Our current value is
How much is it? 28. This
no,
is
it's
carrying value,
346.
131, right? So they'd already given us that value for this. So it's 28,431. Yeah. Cost price is what we calculated, 40,000. So what is missing there in the equation is the accumulated depreciation, right? Which will simply,
I'm confused. Where is the 28,431 coming from?
it is the carrying value of the asset at the date of disposal, which is this one. Disposals at carrying value. So this is the carrying amount of the
Oh,
asset
we are
that
at
was sold.
movement.
Yeah, it's under
Oh,
movements in your tangible asset. Whatever.
yes.
Here
I
it is.
thought we were at the beginning.
No. It's movement section. So you get that carrying amount at the movement section. Does it make sense?
Yes.
Right. So now, so it means now the accumulated depreciation here is the difference between cost price minus carrying value. So our cost price was 40K. What was the carrying value? 28, 40, 431. So what is the difference?
11,569.
11,569. That's what you put there, 11,569. But you show the calculation, I get it here. You show it as 40K minus 28,431. You show that
We sometimes
calculation in
don't have
brackets. Huh?
we sometimes don't have enough space to write the calculation, so we just write their number.
Yeah. But you have to show the calculation somewhere there. Yeah.
Yes.
Where they say workings, yeah, you put those, you show this calculation. So remember, this is part of your workings. So this is maybe working one. Yeah.
Yes.
Yeah. So now you have the accumulated depreciation, you have debtors control. Which side is big here, debit or credit side?
Um, is the debit side
The debit side is big, right? So if the debit side is big, do you have a profit or do you have a loss?
a loss?
There's a loss, ne?
Yes.
So the loss is the difference. So here you say loss on sale. And it is that difference. How much is it?
300, no, 3,431.
3,431. That's your asset disposal.
Okay.
Simple as that.
It sounds much easier when it's like this, but when it comes to having adjustments according to the
Mm,
information and the tangible asset, that's
mm.
harder.
It's another thing, ne?
Yes.
Yeah. But literally, this is how you do it, buddy.
Okay.
Mhm.
And
Any questions?
yes, I do. I want to do
Mhm.
the one for where it says we must calculate the total depreciation for I'm not sure what it says, but it says must calculate total depreciation. And I'm not sure if it's um this past paper or it's another one.
Which question is it? Where they say provide missing amounts.
No, I think there's a question somewhere
Mm-hmm.
where it says we are given the tangible asset and then the extra information and
Mm-hmm.
then we have to calculate the total depreciation where it needs old, new, and sold.
Oh, okay. I think it's a different question. You can send it to me and then we can look at it.
Okay.
Mm-hmm. I can wait for you to send.
I'm a bit confident.
At least now you've got the idea. to say remember with what they would do most likely, they'll give you an asset that is sold and they would ask you to draw up an asset disposal account. So it can be, besides equipment, it can be machinery, it can even be land and buildings. It can even be motor vehicles. So the most important thing to remember, Tabang, is that when you are looking at equipment,
Yes.
or let's say any asset there, is you're always dealing with everything that you're gonna put there. It's at cost price. Everything that's gonna be in that ledger account, it's at cost price. So obviously, you would have an opening balance. If you bought, you would have additions. These additions you're showing, these things are shown at cost price, Tabang. Don't miss this. These things are shown at cost price. Even when you sell, meaning to say if there's a disposal that you have to account for,
Yes.
the value you are showing, you're simply showing the value of the asset, value of the, or let me put it this way, cost price, all right, is the cost price of the asset that was sold. Because it's not all the assets that may be sold. It could be just one particular asset with the value of 40,000, like what we had in the case of our question. There was an asset in form of an equipment to the value of 40,000 that was sold. So this is what you need to remember, ne?
Yes.
Right. So there was an opening balance at cost price, additions, meaning to say they bought new equipments at cost price, then they sold one of the equipments. So when the disposal we are showing in this equipment account, it is the disposal of the equipment that was sold at, and we show the cost price of that equipment. That's all we are showing there in the equipment
And just
account.
to remember, we have to refer to the ones that are in the movements part, right?
Yeah. So you see
Okay.
this part, additions and disposal, where do you find them? Movement section. Same thing with the disposal. Where do you find it? Movement section. So far, so
Okay.
good. Mhm.
Yes. I wanted you to do the other ones like the reconciliations, but I don't think I'll have time for that because
Mm.
I have to at least sleep for 6 or 7 hours.
Yeah, you need to rest because you don't want to have a brain freeze.
Yes.
Mhm.
So yeah, thank you.
No, it's a pleasure. Yeah,
I'll just try to remember them and
no
practice
problem.
one more time before I write.
No problem. I'll upload these videos on YouTube real quick so you can have, if